Hey everybody, it is Friday. I'm wearing red. I hope you are too. We love our veterans. This is an outward expression. I wish you could walk through our office right now. It's like a sea of red every Friday. I hope your family has the same tradition. Like we do every Friday, we're going to introduce a topic and speak just for a few minutes on it. Today, I want to talk to you about basically a concept that we've got other videos on where we've discussed the possibility of paying off your 30-year mortgage early, referred to in the industry as prepaying your 30-year mortgage instead of just getting a 15-year mortgage. So I'm going to kind of expound on that today. I'm going to put those links to the prior videos we've done down in the description below this video. But today I wanted to kind of expand a little bit on the topic and discuss what exactly prepaying or paying your mortgage off faster does for you. Both the pros and cons, or the benefits and the expenses, if you will. We're going to talk about both today. So it is pay off VA loan early, also referred to as prepaying. Okay, we're going to talk about that. That's what we're going to talk about today. When we talk about prepaying, we're simply referring to your ability or your right to make larger payments or extra payments every single month or throughout the year in order to pay off your loan faster. That's it. We're not talking about back in the day, if you're a seasoned homeowner, there was prepayment penalties where you got penalized if you paid your loan off too fast. Those are gone. On VA loans, I've actually never had them, but in the industry, you're not going to hear the word prepayment penalty almost ever because after the housing collapse, they were just kind of abolished, okay? Keep in mind there are no prepayment penalties ever, never have been, never will be on VA loans. With a VA loan, however, you could still pay your loan off faster or early. We'll get into that right now. Why would you want to do it? Okay, here's the big question mark. That's a funky looking question mark. But why would anyone want to pay their loan off early? Think about it for a second. Main reason, less interest. We all hate interest unless somebody's paying us that. If you're a bank, you like interest. But everybody else, if you're borrowing money, you don't like interest at all. And when you prepay your loan, what it does is it brings down your outstanding loan balance. And interest is always calculated on the remaining loan balance. And so when your interest rate is applied to a lower balance over the long term, you do end up paying less interest, okay? Even if you pay your home off a few years early, you could end up saving hundreds or even thousands of dollars in interest just a couple years faster, and it saves you a ton. Why else would we do it in addition to less interest? Faster equity. I just talked about all of your extra payments start getting applied to your principal balance. If you owe $100,000 and you pay off $25,000 through a prepayment by doing it faster, you now only own $75,000. Even if the value of your house didn't change, you have an additional $25,000 in equity by paying your balance down quicker. And when you build equity faster, it gives you access to a much larger reservoir of cash or rainy day funds. If you ever needed to access that equity for an unexpected expense, this may really help you out by having that equity build up. Extra equity can even help provide a financial boost for milestone events like sending your kids off to college, adding a pool to your backyard, or upgrading your home. You can tap into that equity as a veteran. So paying your home off faster in those years where you don't need the additional money can really come back to benefit you in the future. Now, payment flexibility is something that I really, really like. Payment flexibility. And we mentioned this a little bit in those other videos where we talked about whether or not you should get a 15-year loan or a 30-year loan. When you prepay on your 30-year mortgage, when you pay that 30-year mortgage down faster, you're not trapped into making a larger payment like you would be had you elected a 15-year mortgage to begin with. Again, life has a way of throwing all sorts of unexpected curveballs at us. The 30-year payment always has a smaller mandatory payment, and you have the flexibility to pay more or less. Well, never less than the 30-year payment, but it's less than the 15-year payment would be. So you can always go back and forth between the 30-year payment and what would be a potential 15-year payment. And this really helps you avoid default and eventually a foreclosure if your income situation changed in the short term. So look, when circumstances allow and life gets back to normal or you get an influx of money, make additional payments or prepay that loan. And as long as you're always making at least that minimum 30-year payment, you'll never need your lender's permission to adjust your payment up or down. If for some reason, and we've talked about this during this COVID world we're in right now, that you can't make your minimum 30-year payment, you might need to contact your lender or your servicer, whoever you're making payments to work out some sort of temporary forbearance or something else in those situations. Or you can look at doing a streamlined refinance, which we've talked about a ton. Always look at doing that prior to making forbearance or modified payments of any sort, okay? Those are the main benefits of prepaying your VA loan. Let's talk about the cons of prepaying your VA loan. Again, I don't necessarily like to use the word con, but some of the things that you should really consider or think about when paying off your loan early. Even though you do pay less interest when you prepay on a longer term loan, for example, you've got a 30-year mortgage and you're paying more than your minimum payment, that interest is usually still slightly higher than if you would have elected a 15-year loan to begin with. Now, the last time I did this video, I'm pretty sure if I remember, 15-year rates and 30-year rates were almost sixes. And that's why we were really saying you got to understand interest rates at the time. But generally speaking, okay, a 15-year rate is normally lower than a 30-year rate, okay? So you might be able to get lower interest by doing a 15-year loan. The rates are only slightly higher, though, if you go to a 30-year loan. And this is just something that I've learned over kind of the long haul. Historically, this is what you're going to see. So what's another downside of prepaying your loan? Well, less money for other goals. And we all want more money. So while it can feel exciting to say, hey, my mortgage payment's only $1,000 a month, I'm going to send in $2,000 and watch that balance start to come down. Don't set yourself up for failure and dip into that rainy day savings fund that you've got. Make sure you're being meticulous and you're thinking about, should I really put all this money towards my mortgage when I'm sitting on a $10,000 credit card balance and my credit card interest rate's at 22%? So be careful. You're just going to kind of want to discuss that with your financial planner, your spouse, somebody that you deal with your finances with. Talk about whether or not you should be putting all this extra money into paying down your mortgage faster or if you should be utilizing it somewhere else. Here's what I'd like to conclude with. When you prepay on a 30-year VA loan, you're going to get the best of both worlds. You have less interest over the long haul, but you also get flexibility to make lower payments if life changes and you don't want to have to make that 15-year payment. And it's just a good strategy. We recommend almost always getting a 30-year mortgage over a 15-year mortgage. We tell people all the time, stick with the 30. You can make a 15-year payment when life allows, but you're not locked into that higher payment that you're going to get on a 15-year loan when compared to a 30. So thanks for watching. I'm about out of time. Make sure you're wearing red every Friday. We'll see you next week.